Okay, I think we're live. So I'll close this not to get an echo. And let's go. Good afternoon, traders, and welcome to the special webinar today on wave analysis. So, okay, if you guys could ease the chat up, we will go faster so we wouldn't have to, I don't have to read the chat and answer to anyone, right? We will leave time at the end of the webinar for questions, for Q&A. So let's go. What is today's webinar? Today's webinar, I want to explain to you what wave analysis really is, why it happens, why wave actually happens in the chart, right? Because I think there's a big misconception with that part. That will be the most important part, and how you can use it to your advantage. I'm going to try to give you, in a very short time, the best I can. You will not learn wave analysis from this webinar. So don't come with the obsession, but you will have an idea how it works and why it works and why it will give you an advantage. So let's start. What really is wave analysis? I'm going to go in the weekly chart. I'll go in any time frame, but I'm going to go in the weekly so you can look at this chart. Let's just look at this chart. And we can actually do that on any time frame. We can do it on this time frame. This is a yearly chart, right? This chart is from 1953. And if there is anything you can see in this chart, is you can see that there are very sharp moves, times when they make very sharp moves, and times when they do this. They make another sharp move, and then they do this again. And then you followed by another sharp move. Internally, you're going to get small ones like that there. You got a small one here, right? But you can see this, right? That's the whole thing, is that you can see this. And then you see something like this. Right? Most people will not know what happened there, but that's a huge expanding flat in the middle. I'll draw it so you can figure out where that pattern is. A sharp move, a sideways move, a drop, and another sharp move. You can see small corrections there. You can see small one here, and then you can see something like this in the making here. I said in the making because it's still in the making. So if you look at the chart, you can see that it moves in some kind of an impulse and corrective structure, right? It moves in what traders who looked at it then call waves. An up wave, a down wave, an up wave, and a down wave. Right? If you look at this, you can call them waves. You want to call it waves, you call it. You don't want to call it waves, you can set impulse and corrections. The market does that. So there is no question as to whether the market does it or not. Right? And I don't care if you're not an Elliott wave person, if you don't believe in wave analysis, if you're, you're a skeptic of all of this, that it happens because you can see it, right? I'm showing you that means it's visible. You can see that it happens. So I don't care how skeptical you are about fundamental. I'm a fundamental. I don't believe in all these wave things. And there are people who do that, right? Is that there are waves. You can literally see them, right? There is no question about that. I think the question and the part where people are getting very skeptical about the theory as such is that they're saying, well, the market is random. And if the market is random, there is nowhere you can make a forecast as to what the market will do. And I've posted a number of videos already before showing you where scientists have looked at things that are random. And when they plot it on the chart and when they do their experiment to see how random is it, and when they run it for a number of years, they notice that in all the randomness, there were organized patterns. Very well organized patterns. Right? So that is how nature works. Why nature works that way, I have no clue. But scientists are still really looking for clues as to why nature works that way. But in anything that looks random, there is an organized structure within it. It's just that not all of us see that organized structure, right? We don't see it, but it's well organized. The whole wave theory is based on the concept that you can actually see it. You can actually recognize these patterns. That when they're making consolidations, when they're making these sharp impulses and making these consolidations, they tend to make patterns. they tend to make patterns when they're doing this. And they make patterns, and these patterns tend to repeat themselves. That is all what wave theory is about. Is that they make patterns after an impulse, and in that consolidation period that you're getting, whether you want to call it the pullback, a consolidation, any words. Forget about the words, what you're going to use for it, right? Your terminology is not important. What is important is that it's doing something that repeats itself very often in the chart. So a lot of traders have studied that. A lot of people have studied that. One of the persons who's made most improvement in studying those patterns was Elliott, right? All of you know that. That's why we call it the Elliott wave, right? The Elliott wave theory. Because he was not the first, but he was the one that did most in it. Not everything, but most in it. That gave people a clue that these patterns do have, they're repetitive. You can recognize them. You can able to forecast them. I think where he really dropped short was that he oversimplified it. He oversimplified it in that he worked with the principle that you're going to get an impulse, you're going to get an ABC correction, you're going to get another impulse. And this really confused the hell out of a lot of people. Because a lot of traders are basing their trading with the fact that you're going to get an ABC. And people who are skeptical always say, oh, yeah, well, I don't think that the market is making any ABCs for you. Why would the market make an ABC for you? Because they're taking the theory as meaning that the market will make an ABC, right? They're literally thinking that the market will go and make an ABC, which is not so. Forget about ABCs. Let's take off the ABCs for a while, right? Let's just forget about the ABC. Does the market make corrections? The market make an impulse, it makes corrections, it makes another impulse, makes corrections, make another impulse, makes corrections. The market does that. So that's a fact. So if you take off the ABC, which is Elliott was trying to simplify it for you guys, labeling it as an ABC, a 1, 2, 3, and then go down. And people say, well, why? I don't see the 1, 2, 3 in the structure. A lot of you don't see it. If you're looking in here, you're like, I don't see a 1, 2, 3 there. I see more complicated structure here than an ABC. And this is definitely not an ABC. That's one hell of a long structure by itself, right? And that is where the difficulty for people who don't understand this thing, and the critics of saying, well, the market will not go make an ABC for you. The market is not making an ABC for you guys. The market is behaving a specific way. And the reason the market is behaving a specific way, because the people who are in the market, the people who use this currencies to trade, whether it's Australian dollar against the US dollar, people who use Australian dollars and trade it against the US dollars, whether it's a business, right? Whether it's tourists, whether it's banks, whether it's the government, it doesn't matter who are doing that. They repeat what they do on a regular basis. Right? They tend to repeat what they do on a regular basis. They pay you salary. They sell goods. They receive their money once a month or quarterly or however they get their payment. Right? They have yearly plans. They go to sleep. They wake up the next day. They have daily cycles. These are regular people doing regular thing on a regular basis, and they repeat that every day. When you go to work, if you're working in, I don't know, in a mining company, you go to sleep, you come back the next day, you open, you start working. The miners will accumulate a certain amount of whatever they're mining, they're going to process it and then sell it. And this continues to happen like a process, right? Nonstop. But it's cyclical in nature. And when you put all of that together, the market itself becomes cyclical. So if we know that, if we know this is a fact, we know that the market makes these moves, we know that the market corrects itself, and then we know that it continues to go in the same direction. It will stop and reverse at some point. What if you can actually study this thing and recognize those patterns very clearly? That's the only question you have to ask yourself. What if I can look at this chart and very clearly identify what I think this pattern is? And the probability of me getting it right is about 80%. Will that give you an edge in the market? That's the whole thing. If you know it's happening, all you have to do, can I really recognize what that pattern is doing? Can I tell when that pattern is going to finish and it's going to break and it's going to go for the next impulse? can I tell what that pattern is in there? Can I recognize this pattern and figure out what it's doing in there? And if you know what it's doing and you can recognize the pattern, you may want to give it a name and you may want to label it, which is what Elliot did. He gave them names and he labeled them because what he recognized is that there were more than one of such patterns, a number of behavior. And I can tell you from what Elliot did to what we're doing, we have identified a whole lot of different patterns. We have identified variations of some of the patterns that Elliot has already recognized. He has told us of some patterns, and we never looked at them that way until last year. There are at least 3 patterns, that new patterns. They're not new in terms of how we label them. We still follow what Elliot does in his labeling. We still follow the basic concept of the 1, 2, 3 that he's labeling, the expansions and all of that. But we have seen variations of them, of the same patterns. We try not to give them our own labeling. We're not that much. We don't want to take credit for things, that we are not the but we have found the variations of the very patterns, and we have found like a flat that has, or a running flat that has 3 or 4 different variations in it. We have found expanding flats that has a number of variations. And once we have found these patterns, and that means you've seen them, you've identified them, you've given them very strict labeling, you've given them a name if you want, or stick to the same name Elliot used, but you can see that these patterns have repeated themselves over and over on a number of charts and a number of time frames and a number of years, and they behave the same way. When you see them, you know that they're going to repeat what they did previously. And the chances of that happening is like 90%. Now, why would that happen? Why are these charts making these patterns? Why is it happening? Is there the people in the market are trying to make an ABC for us, or make a WXY, or make a correction for us? No, they're not. It's not anybody sitting there and said, hey, we need to go make an ABC now on this. Is that the way they work creates these patterns. It's not about making the patterns, and the way the market behaves creates the patterns, and then we look at the patterns that the market creating. And then we said, okay, this one we will call this, and then we will expect it to behave this way. And it works. It's like a doctor actually getting into the patient to see whether his heart is damaged, or doing an EKG and saying, you know what? You see these 3 spikes here? They're not supposed to be there. That's an abnormal part. It means you have a problem with your valve, something to that effect. He sees a specific pattern that tells him what the heart, if there is a problem in the heart, and if there is, what part of it, or what is actually the problem. Specific patterns for when the valves are giving problem, specific pattern when another thing is happening, specific pattern when the arteries in the heart is giving a problem. There are specific patterns, mean there is a specific problem. It's the same thing here. I said K, right? ECG. I'm talking the Russian there. That's EKG is the Russian one. My fault. Sorry about that. Let's go. Right? The Russian is K. If you have Russians in here, they will understand why I said that. I lived in Russia for 25 years. You got to forgive that one. So, that's the basic thing, right? Right? So, you know they happen. You just have to study them and figure out. And that is where understanding the patterns is important, because if you understand them very well, and I was a medical student in Russia, by the way, so if you understand them properly, you will have an advantage of getting the next impulse down. You will also understand if there is going to be a next impulse that will be long enough, or is it going to be a very short impulse before they turn, because they very often do that. Instead of giving you a long impulse, they give you a very short impulse and turn to the opposite direction. So when you study the entire chart in its full thing, you can see what they're going to do. And if you understand each parts of it, you will know with a very high accuracy what they're going to do. So I'm going to show you guys, that is to understand what the whole theory is about, right? And why it happens. It happens because of what is normally. It doesn't matter whether it's the Bank of Japan intervening into the market because they want yen to get, all of you may remember this, because they want the yen to get weaker, and I'll show you those interventions. I doubt whether most of you would recognize them by yourself. This was one intervention. This was another intervention. And I think this was another intervention. Somewhere in here was an intervention. Those were 3 interventions the Bank of Japan made before when they wanted the yen to get weak. You realize what happened with each one of those interventions? The market went lower. But if you're a pattern person, you look at the market like this, you figure out what that pattern is doing, and you know this is coming. You see the difference? Fundamentally, they want it to happen, but it's not happening. They even intervened 3 times. There were 3 interventions, if any one of you remember. None of that changed the structure. None of those 3 interventions changed the structure. The market kept going and kept going and kept going. The short term, they did something. Yes, they had short-term effects. Each one of them had a short-term effect. And I think if I didn't show you and ask some of you to tell me where it was, you probably wouldn't be able to do that. Because you're looking at a structure now and you're not seeing any fundamental news effect of that structure. See? And the market just took off. When that structure is completed, the market took off and they didn't need to do any intervention. And when it finishes with that sharp move, guess what the market should do again? The market should create a structure in here. And this is what you need to study. Forget about this. This is gone. You need to figure out what the market is doing in here. Because if you figure out what the market is doing is here, you can tell 2 things. One, you'll be able to say, is the market going to give us another impulse up? Let me go to the monthly for this one. I'll go to the monthly chart. You will be able to tell 2 things. Is this market going to give us another impulse when they finish whatever they're doing in here? Or is this the end of a bigger structure? The bigger structure actually came like this, came like that, came like this, and came like this, right? If any one of you remember, that's what the bigger structure did, coming from the top, right? If this is the end of that structure, and we are actually going to go down, I can bring it up in the IDC. I can bring it up here. Let's go to the IDC. So I remember what it looks like, and I bring it up for you guys so you can see what it looks like. Let's go in the IDC. Yep. See, you've got this move. It came down. It made that move up. It made 1, 1, 2, 3 in here. You see that 1, 2, 3 in there? It made this drop. So is this the pattern and we are going down? Or is this going to continue to go up and then we go down? How would you know which it's going to do? I can tell you that we will know. You will know if you study what's happening in here. And for you to know what's happening in there, you have to study all the structures, all the patterns that exist. You have to be very good at recognizing them. You have to be very good at identifying them, labeling them correctly, and figuring out which direction they're going to go next. And that is what wave theory is about. If you can do that, the next question is, would that give you an edge in the market? And if it can give you an edge in the market, why not study it? That's the whole point. Why not study something that will give you an edge in the market? And it's a forecasting tool. It's not based on some single line in the market. It's not based on, I'll draw a bat or something in the market and you will see a bat, or you will see whatever animal you love. I don't know, you will see it in there. It's based on what the market is actually doing and the patterns it creates. And can you recognize those patterns? Because the market does it every time. And because the market is also fractal in nature, which means that you're going to see every piece on any time frame, recognizing another piece on a lower time frame or higher time frame, you will see the same structure repeats itself on every different time frame. If you want to go lower down on the daily, you will see exactly the same structure. You will see a sharp move. You will see a sharp move. You will see them make another sharp move. You will start to see corrections. If you can tell what this is going to do, you can tell whether you're going to get that move. And you're going to tell where this move should end and if it should go back down. And then you're going to tell if this is going to go back up or if this will go down continuously. See? You can actually make those forecasts and watch them work. You can do that in a 4-hour if you want. You can look at this move. Remember this sharp move we looked at coming down? And we had this correction in here. And we knew this one was going to go break the low and then turn to the upside. All of you saw that. All of you in here followed me and saw that one. We did that live. You can go back to my webinars and see, right? You can watch what they're doing here. We were waiting for this to make a correction to see if it's going to continue. It came down lower, one more bigger structure. And then you said, well, maybe now the upside is ready. Right? You see? That's the whole point. Can you do that? And if you can do that, the advantage in that is that you have an advantage, you have an edge in the market, that's one. And the second thing is because it moves in waves. If you're good at doing this and you understand where you should enter and where you should exit, very often, even if you're wrong on where the bigger direction is going to go, but you entered at the right place, very likely it's going to start going in that direction, give you a chance to move that trade to break even before it turns to the opposite direction if you're wrong about whether the pattern is completed. So where do we get it wrong, or where do traders get it wrong who do this? I'm talking about the way we do it, right? Because those patterns are complex, and I'll stay to the end because this is one of the complex ones that you need to see, right? Because the corrections are complex, not the impulses, right? This will go up. This here is one, and this one here will go up. But sometimes you may get the point from where you think it is going to go up wrong. And I would show you that in this chart where you may get it wrong, but you would still be okay. So where can you get this wrong? Let's make an assumption that, remember, you're looking for 1, you're looking for 2, you're looking for 3. That by itself is a complete pattern. And most traders would make an assumption that this one is going to take off. So let's suppose you're a wave theory guy and you make that assumption and you bought somewhere here. Would you lose that trade? Absolutely not. You see, you will not lose that trade. The worst thing that could happen to you is you get a break even out of that trade, or you come the hell out of the trade for a small profit. But when you see this happen and they pull back and they make this, you realize that you're getting a more complex structure. And that's one of the things. Remember, I told you the problem with Elliott Wave is that it's it seems to be simple, right? They actually sell it as a simple ABC structure. And it's not that simple. It's very, very complex. Complex only in the corrective structures. But like I said, if you can recognize each piece of that structure correctly, you're going to get good at it. And you're not going to be taking a lot of losing trades, even when the structure becomes more complex, because your point of entry would be good. And then you would start to recognize, oh, well, I need to get out because we're going to make a bigger one and you can buy back right there, which is what we did. If you were following me, we did that when they broke the low. We bought back right there. And then they did that. And at that point, we thought it's going to go up because you have 1, you have 2, you have 3. And if you were thinking that, okay, now you have a very big pattern, it should go up, you would be right about buying it. And if you got out here, you'd be right, because now we got out here and we're looking for something like this that should go up. And it pulled back. And remember what I said to you, even if they break the low, it doesn't change that structure. It just makes this part a little more complex. With a 1, 2, 3 in the middle there for a 1, 2, 3 here, and a 1, 2, 3 here. Just a little more complex. Should this one go? Of course, we're buying it to think it's going to go. Of course, I think that is going to go up. And that's my strategy, is based on buying that for it. Would it go? Would that go? I don't know if this is going to go. Maybe this thing comes here, do something like that, do something like that, do something like that, and go back down again. And we will have a much more complex pattern in here. But guess what? That will not change the structure. Let me show you one of that, because people, the people who are skeptics are saying, oh, well, every time it doesn't go his way, he's saying it's becoming a more complex structure. So specifically for those people who are actually skeptics, I'll show you one that took a long time, but still goes. So let's look at this structure here. And I'm going to show you first the time that this structure took. This was your first impulse up. That is where the correction started. That's how long it took, 954 days before the next impulse started. Did that change the structure? Not for one single bit. That did not change the wave theory, neither the structure. What you got is a more complex pattern. So if you were trading this, and I'll show you where you could be trading it, and you'll make money, but you'll probably get it, a lot of it by mistake. You will probably not get a lot of it to go. So if you were trading it here and you saw this impulse, let me use a different color. You saw this impulse and you see 1, 2, 3, and you thought this is going to go up, you would be right. Right? Don't ask questions now. I'm not reading the chat. I'll read it afterwards, right? And I'll leave time for it. You would be right. You would probably say, you know what? I think this thing's I'm gonna buy here. Look what would have happened if you bought there. I'm gonna go slowly. You see, it went up, it came back, it went up back. You're like, okay, this is not going. By this time, you would know that you made a much more complex pattern. And if you bought here again for this to go up, you would be right again. You should do that. And you probably should get out of it and watch this pattern do some more, right? It goes up back there, it comes back. This would not be, when you know pattern, you will know that if you get this, we're not going up. We're actually gonna come back to retest this low before we go. So very often you would hear me say in the webinar, we're expecting to retest that low before it goes. That is because we understand that that pattern is incomplete. You need a complete pattern before it's gonna go. So at that point, I would say to you, this thing has to go back, retest that low. And when they came here and they stopped, you would buy. You would buy in there because we would think at that point that we're making one of those contracting patterns. And that is okay. If you bought there and it keeps going up, 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 come back, go down, go back up, you would be getting out of that for break even. Or if you kept it, you can get out now of it. Because now when you see this pattern, you know this pattern is going to go one more low before it goes up. Remember the 1, 2, 3 principle? 1, 1, 2, 3 in the middle of that, and one more down. You know that principle. I've shown you a number of times, and I show you every time. And it comes down. Did they retest the low before they go up? Now, this is a weekly chart, so this took how long? 3 years, probably, right? If you were trading a 60-minute chart and it consolidated for 2 days and you buy and it didn't go, it came back and it consolidated again for another 2 days, you buy, it didn't go, it came back and it consolidated for 2 more days and you buy, 6 days, maybe 8 days, guess what? You're likely going to get this. If this was a 60-minute chart, you're likely in for this trade. Way up to the top there. So don't think of this as a weekly chart. Think of it as a 15-minute chart if you want. Does it work? I can show you a number of these patterns in a 15-minute chart that we traded. And we trade every day. So do the patterns work? It's not about the patterns. Like, remember that. I want you to get that. It's not that they're sitting here making patterns for you. It's that if you see this, you understand that the market is behaving a certain way. And when the market is behaving like that, somebody is doing something somewhere that will cause the market to go up. And that principle of how market behave is very, very simple. If you know that, you would understand that principle. You would understand why this market is going to go up regardless of what. See? There's a lot of questions. I haven't read the questions. I don't know what they are about. I'm not reading the chat. If you guys hold your questions to the end, I will answer them. I can't look at two screens at the same time, right? And the same thing we're saying here. The same principle applies every single time. So what you need to do if you want to have the edge in the market, any one of you are a trader out there, stop doing the simple things. People would like you to believe that if you put a straight line on the chart or a horizontal line on the chart and they break that line and you buy, you'll make money. Or as one guy is advertising, every time I go on YouTube, this thing just pop up at me and it really annoys me after time, but it's the first ad that pops up. Have you seen the London day breaking strategy, the London day breaking strategy, something to that crazy stuff that just created. It's a strategy that makes you $2,000 every day. Every day, and every time I open my YouTube, that thing pops up at me because I do look, because I'm a trader, it will pop up at me every day with that London day breaking strategy to make you $2,000. It just becomes funny at a period of time because that's not what is going to happen, right? It doesn't behave that way. The market is not, you can't make $2,000 every day. If you were trying to make $2,000 every day in this on a 60-minute chart buying it, you probably would be stuck in here for 6 days before you get the trade, right? So people want you to believe that thing because it's simplistic. It's easy, right? Our minds are simplistic. We want things to be simple. Tell me where I should buy right now. And it must go. If it doesn't go, you're wrong. And trading is not about really being right and wrong about it. It's about having the edge in the market so you can make money using that edge. And when you're wrong, if you get break even, you're great. So if you use this type of analysis, when you're wrong, you're very likely going to move that trade to a break-even trade. And we actually, in our group, I put that challenge out to my traders. You should take on. One of my traders did. In 1 week, you don't have to identify yourself if you're in here. I'm just going to, I have his agreement that I can use it anytime I want. He took 27 trades in 1 week. He wanted to take all the setups. 80% of them he won. 20% he lost. When I look at the win-loss ratio, it's great. When I look at the average wins and the average loss was about $200. The average win was about $260, something like that. That told me something. If you have 80% and your average win is that you had a lot of break-even trades. Which means I would make an assumption that if he's losing $200 in a trade and 20% of his trades are lost and he made a lot of money, right? And his average is still 260, just slightly above. At least 40% of his trades will break even. At least 40% of the trades he took were break-even trades. And he made a lot of money. If I remember correctly, on his account that he told me he's trading, that should be anywhere like about 20% in 1 week that he made. But he specifically did that to take all of them. He wanted to see whether it's giving him an advantage, whether it works. Oh, he just told you exactly how much, 38.8%. So you know now, right? He just told you exactly, right? I didn't want to open you to a lot of questions because I know now you're going to get a hell of a lot of questions in the group when you go in. So he just told you how much he made, which is real, right? Which gives you that. Now, it's not something all of you can repeat every time because you may not be able to sit in front of he trades full time. You may not be able to sit in front of the computer and catch all the trades. And you don't need to do that to make money. Good question. Keep it for when I finish. I'll tell you how to know that, when it's going to make shallow and deep corrections. Remember, I started by showing you this chart. And remember, I showed you that there was only 1, 2 corrections in here that I showed you. Don't you think this move going down had a hell of a lot of corrections? Don't you? I could tell you that in this single candle here that I'm putting, there are probably corrections. Those are corrections of different degrees. When you learn the concept I teach you, when you learn to understand that it's not a simple thing, it's not a simple ABC, but it's a concept that you have to understand about an impulse and correction and how it's going to work on every different degree, every different time frame. You will learn to recognize when there is a small correction coming and when there's a big correction coming. You will get that. Right? It works and you will get it. So that is what it is. And I'm doing this webinar because I've had a lot of people writing me and said, well, I don't believe in this theory, but I like what you're doing. And how is it working for you? And we follow all your chart, and I still don't think I read Elliott Wave book and I'm doing Elliott Wave and my counting is not working and it's not. Forget about the counting. Take off all the counting. Forget about all of that. The counting is only to guide you where you are on the chart. What degrees of count you're looking at and where you are. It's not so much for trading. It's more for analysts. For trading, you might not even need to count. You will have to just look at the chart more often to know where you are in the bigger structure. But if you're like me and you can remember what the chart look on the yearly, the monthly, the weekly, and if you do that over and over, you will remember it. You don't even need to label the charts. The labeling looks very fancy, and I see some charts, these guys label it a lot of ABCs and 1, 2, 3, 4, 5 all over the charts. And all wrong and all no good. That's a waste of time. That's a waste of a lot of good time. Because those guys are not trading. They don't actually trade. They just label all over the place, and they don't really care if those labelings work or not. They fix it to make it work. A lot of them. I know people like to say you shouldn't criticize other people. I'm not criticizing other people. I'm not calling any specific person name. I'm criticizing what some people do. The concept that they're using and how they're misusing concepts. Why they do it, I have no idea. Don't ask me. If you look at something and you see one wave, it's one wave. If you see three, it's three. Now, how do you break up these internally? That is where we come in. And that is where I came in. That is where I found something that has changed my view of Elliott Wave. Something that has totally changed my view of it is being able to identify a single wave and show you how to identify how many waves is actually in that wave. Not how much you want to put or how much I want to put, but how much is actually there. And it becomes a fixed standard way of looking at the chart. And that changes how you do all your analysis. And now you start to see patterns much more clearer. It becomes crystal clear to you. See? You can make a lot of thousands with crypto. That's not so much based on anything. It's just based on you buy it cheap and you wait, right? And you got lucky. Because think about a guy who bought Bitcoin at 19,000 and hoped to make 3,000% like you. He's probably today homeless. So there are times when you just have to use common sense to trade. You don't even need anything like silver. All of you would remember when silver was 14, what did I say? Go buy silver. You don't need analysis. You don't need anything. You just need common sense to know that if silver is 14, 15, buy it. Right? Because the only direction silver could go from there is up. Right? Right? Sometimes it really gets you lucky, right? Sometimes, there are things like Ripple. Remember when Ripple was 15 and 14, what I told everybody? Buy it. I don't trade those stuff, but I said buy Ripple. If you like to buy a cryptocurrency, go buy Ripple. It went to $3, from 14 cents to $3. You didn't even need to do analysis for that. There was some analysis in it, but you didn't need to do that. I mean, I'll be honest with you. I didn't tell you to buy it because of what I saw in the structure. The structure was supporting that, but that's not what I tell everybody to buy it. See that? We had this structure, yes. Put it in this one. We saw the structure and we know this structure was going to go up, but that wasn't why we told you to buy it. Actually, we told you to buy it from this piece. This was where we were starting to say buy it. But it wasn't because we saw a particular structure. It's because, hey, this thing, from here, it can only go this way. But from this way, there is no limit to where it can go. That's common sense, right? When you trade like this, of course, structure helps you. But common sense, nobody has actually changed common sense, right? I actually thought it's going to go to about $1. I actually tell the guys, watch it. You could get at least about $1. And again, I was wrong, right? Because that thing went to $3, right? So if you kept it and some of our traders kept it, they came out somewhere about 2 something. That's good. Same thing with Bitcoin. I think when I posted my very first chart on Bitcoin was where I said I think I posted a chart showing that somewhere in here that the bear market, somebody asked me, the downside on that bear market is over, it's gonna go up. I didn't think it's gonna go that much. I mean, if you honestly, I never thought it's gonna. I thought they'll probably just make one more impulse somewhere to about 2,000 or so, maybe 3,000. I never thought this thing is gonna go to 20,000. And you don't need to know that sometimes. If you were trading it and you bought it, you bought it there and it goes to 2,000 and it goes to 4,000, you probably keep some, right? I would take profit out of some and keep some or rebuy it. So now structure is going to be important for you. If you're going to trade Bitcoin now, you better know structure. Again, now you don't want to lose it. With where it is right now, you better trade it knowing structure. It's not at a low anymore. When it's at the low, it's easy, right? You can just buy and wait, relax. But when it's not at the low, you need to know structure, when to get in, when to get out, basically. So that's what I want to get over to everybody who is trying to figure out what I do, how I do it, why I'm doing it, and how it's helping me and how it's going to help you, basically, right? So I say I'll leave some time for questions. We have time. Any questions? Let's go. You can type your questions now. If you put them earlier, I didn't see them, type the questions now, I'll watch them. How can we know when the price gives a shallow correction? You have to study the whole structure all the time, and then you will know when you're expecting a small correction or a big correction to come, depending on where the structure is right now, right? So you're looking at it, you know you're expecting a 4-hour correction, about 60 minutes correction, or a daily correction. At what stage would you think you guessed wrong? Not guessed, we don't guess. We do forecasts based on what we have. At what stage would I know that we're getting a more complicated structure than we have? Like I said, on the yen, it goes up, we were expecting a correction, we closed the buy, we were waiting for the correction to go up, it never go up. It broke the low, we knew, okay, that's a more complicated pattern, we are buying now. We were waiting for the breakout to buy, and then once it break the low, we were like, okay, we got that wrong, this is a more complex pattern, we're buying the low now, right? You see a different pattern, let's put it that way. You will see a different pattern in the making. It's not always it's gonna break the low, but sometimes you just see a different pattern, and you know that, okay, this pattern will behave differently. Let me show you guys one example of that. Good question, by the way. If everybody hold a second, because I'll miss a lot of questions. Let me show you copper. This was exactly what we did when we were trading the copper, right? Let's look at this. And this is how you would see something where you get it wrong. All of you who saw when I was in TradingView, right? Right before I got the issue with them and leave, or they throw me out before that thing happened. This is what we were thinking. We were in a downtrend. Remember this downtrend you had? And when I saw copper, we had this pattern. If any one of you know anything about pattern, that looks very much like it's making a triangle. 1, 2, 3, 4. You would make one more up, and then you should go down. Right? You should go down, actually, not up. So let me see if I can find the chart that I posted there. It's probably on a daily. Let me see if it's on a daily. Because if I have that chart, I will be able to show you where we changed that. Nope, not in the daily. Let me go back in the 4-hour. I'm trying to find the chart itself because it was posted and we had it. Okay, I can't find it. I don't know why. It's probably on some other chart that I have it. So we forecast this move to come up to the top. We forecast that sell to the downside. And then once you got into this sell here at the top, remember if you sold at the top, if you're okay, right? It comes to the bottom and this starts to go up. We moved that to break even. And then we said, guys, be careful. Something else is happening here. We're not breaking this structure and we should break it. And then we went back and we said, okay, what are the other patterns we can see in here? And once we shifted this, we saw that, okay, this could be your triangle. This is your first impulse to the upside now. You get 1, 2, 3, 4, 5. You should go this way. And that is when we change the forecast to the upside. So the buy would come where? When you break out of this structure. So as soon as they break out of this structure now to the upside, your buy comes there. Because we missed this buy. This was a buy I think some of my traders took for a short-term trade. They thought it will consolidate here. And you probably will get lucky. But your buy comes in here now. That's your trade. Because this becomes your first impulse. We saw the change in the pattern. Actually, I posted that step by step how we saw the change in the pattern. This sell was posted, that buy was posted. So you can actually see them. They're still in trading view. If you go there and you go under my name and you look for copper chart, you will probably see it, right? So there were times when you thought that it's making this pattern because you had this amount of information. And then that information changes. And then you said, you know what? We see this. This is what we're looking at. As a matter of fact, when you have triangular patterns and you do my course, you will know all the variations of how triangular pattern behaves. Actually, we can identify every single one of them now because we know every single way a triangular pattern will behave. We have identified every single one of them and we look for them. We are on the lookout for them when we see a pattern that starts to look for a triangle, right? We know them. And that makes us much more aware of what trade we should take and how we should, move our stops in those trades. And that is what is important because now you start trading from knowledge point of view, not just guessing where you think it's going to go. Let's see. Oh, so much questions I missed. Wow. Let me go. How to know if it's 5 or 3-wave structure? We teach you to do that. Please give us any small indication to identify a single wave. Good try. What other materials do you suggest we study beside Elliott? You don't need to study anything else. If you want to learn this, that's like the basic stuff. You just read that as basic stuff and then you can. Next one, is there any way to predict if it is a running flat or expanding flat? No, absolutely. If it is making one of those two flats, there is no way to predict which one it will make. But there are specific ways of how you would trade either of them, right? Specific strategy of how you would look, what you would look for if it's going to be a running flat or an expand, and how you're going to trade it. So you don't need to know which one is going to specifically make. You need to know how you would trade it. How far should the market go before you move your trade? We don't move stops based on what market is going. We move stop based on what the structure is doing. So if there's a structural change you're seeing, you move your stop. At least your stop should be where you think that structure is going to change. When it's going to be wrong, when that structure is wrong, when you're wrong, it's going to change the structure. You should be out of the trade. What structure should be New Zealand? And we're not looking at any particular charts today. Like I said, you gave us a tease in the Pound USD and the yearly. Will you go through it? The Pound USD. Okay, let me see if I still have it on this chart because I was looking for it the other day and I think I may have. Let me see. Here is where I see change in structure as well, right? IDC. On monthly, I think so. Okay, it's not on for some reason. But this is where we're seeing a change in structure, right? This is where we're seeing a change in structure. Because first I thought this was all the correction. And we are going down, and we are going down, which was correct. But then we relook at the whole structure, and this was your impulse, and we never break that low. We're not breaking it. So there's a good chance we're still in a correction. And if you look at the way they're building these patterns with the expanding flats in the middle, there is a good chance we're making another expanding flat here. So we made a new forecast based on what information we have now. And we're waiting to see if they're going to give us that correction to take off. We're going to be buying like crazy. If they break out of the structure to go down as an impulse, we're going to be selling like crazy. So right now you should be selling because it's making corrections. And when that correction is over, then we will see whether it's a big buy, a long-term buy, or just a small corrections, go back up and come down. So we would need to see a correction, something like probably 6 months or so. A couple of months, they should go sideways. And if we get that, then you're actually buying for the next move up. You know, they're how the structure is going to vary. We could show you, like, for example, this, when you want to see a structure, something like this. It doesn't necessarily have to be this particular structure, but something like that. Something like this. Not necessarily this structure, but something like that before you get the next impulse, before you get the next impulse. And before you get the next impulse up, you would want to see the similar structure here. And then you look for the next impulse up. If that is not so, and it's not doing what I think it will do, then we'll expect this to go down. And I'll be pretty happy with that. As a matter of fact, if it falls, I'll be much more happy with that because I'm in sales. If it goes up, I'll probably get break even in some of those trades. I'll probably make profit in some of them. Not the profit I'm expecting to make. I'll get the hell out of them and start looking for buys. Remember, it's going to take a couple months. Remember I said that? None of these made 1 month, right? None of this was 1 month. So we haven't even started that move down as yet. That's sideways move. Just to put it. Let's go. Let me see how much questions more I can do. I'll select questions. Sorry if I don't select your questions. If you're just asking me to show your chart, I'll not select your questions, right? What structure? Forget about that one. Hello, how you gave that? We looked at that. I've seen waves working perfect and stock charts and market predicted. They do work. They work almost perfect and everything. When it doesn't work perfect, you got it wrong. I always tell myself this: when I don't get the forecast perfect, my mistake. It doesn't mean that the patterns don't work. I have to go and relook at it and restudy it and redo it until I get it right, right? And that's what I do. When you look at a clean chart, do you see 1, 2, 3, 4, 5? I don't even look at the charts that way anymore. I don't look for those. I look for the entire structure, what the pattern is and how it works. I hardly label charts and I hardly name them. I know them and I know how to do it, but it's useless. You don't have to do it. Do moving averages help? No, moving averages are actually very, very misleading. Let me show you why moving averages are misleading. Moving averages is taking a certain period of time and giving you the average of you know what the chart is doing. So if you have a moving average in this, you'll probably see it going down like that. And when this move starts to the upside, you will not see it. Because first they will take this average and add it up with that little piece. And by the time it gets to the top, that's when the moving average will start to curve. And it's too late because what's happening, it's coming down back again. And when you're in that consolidation, if you're in a 60 minutes consolidation that is like that, and they take that period of time to tell you how the moving average should look like, it's going to look like something like this, you're going to miss this fall because you're looking at a flat moving average. You're not looking at the moving average that says it should go down. It's very much lagging and it's useless. It's same thing with ATR. I saw one expert talking about ATR and how they use the ATR and how it's helpful. And I'm like, you have no clue how that thing could really be wrong to you. Because if you're taking the ATR of this period, the average true range of that period, your range would, if it's a 60-minute chart, your range would be 10 pips. You're going to miss the fast move down or the fast move up. You're going to miss those moves. Because if you get in the trade, you're going to think it's going to move 10 pips. And when the impulse starts, the impulse is going to move 100 or 200 pips. And you will miss it because you're going to take profit 10 pips. You thought that, oh, we're moving only 10 pips a day. So I got in the trade, 10 pips, I'm out. And that's when the impulse actually took off. And you miss the rest of it. By the time it gets to the bottom for you to take this range, to get into the moving, the ATR will show you, oh, this thing moves 200 pips a day. And you take a sell here hoping it's going to go 200 pips. And you're stuck here for 200 days because it's just going sideways. So you see those things, anything that takes only a piece of the chart and not separating the impulse from the correction will give you wrong reading. It's that simple. When a chart is in consolidation, that period of time will slow everything down. Slow the moving average, slow the ATR. And you will get slow readings. You will get the wrong reading because you're not going to, when the impulse starts, you will miss that. The only thing that makes you figure out where that impulse could start is when you're actually looking at this corrective structure. You're reading the structures and trying to figure out where that structure is ending. That is why we were able to forecast this move down from the top there. If you don't believe me, go look at my Facebook page. You don't have to believe me. Go look at my Facebook page. That forecast is there. Made 2 years before Brexit. That we're going to come to break this low. Because it's based on structure and what structure is doing. Someone is taking your course for 6 weeks. Do we have 8 hours free time a day for 6 weeks? No, it's 1 hour a day for 6 weeks, and you have the lifetime access to my group. You don't have to worry about that. For those of you who are interested in the course, so I don't answer any more questions about the course. The idea is not to talk about the course. I'll just give you my Skype. Just add me to Skype, and all your questions will be answered there, right? The Skype is, let me just type it there. That's my Skype, Mangal45. Send me a Skype message, and everything you want to know about the course, you will get answered there. Let's not disturb the webinar. Everybody got that? I'll remove it now, or let me give you 1 more minute to do it. Just write it down anywhere and send me a message there. Add me to Skype, send me a message, so we skip that, right? Everybody got that? Okay, we're off. Let's go. Let's come back to questions. Let's see. Anything you want to know about the course, you can ask. By the way, these structures have shown so many leakage of information in the market. I think it is pointless to trade in maneuver. Hedge funds as a satellite tracking. It is pointless to trade in fundamentals or hedge funds. I can't comment on that because I don't know much about that. What you're saying, you know. I have seen recently a chart, I shared it some time back with you, which was creating AB squeeze. It went perfect. Great. The biggest investments the traders make. Oh, okay. I think you're talking about having equity to trade with. If I remember, you maybe have commenting on that, right? Which you should have. Would you take any sells once you decide UJ was upside or ignore sells? I don't take based, that's the next good question. Let me answer that, and we can call it a day on that because that's a very good one. I don't take the question based on the forecast, right? You make the forecast and then you look for the setups, specific setups to take the trade. So it's not just because I think UJ is going to go up, I go buy UJ right now, right? I have to see specific setups. So I will go onto shorter time setups to take the trade. So sometimes I'm wrong, and then I get in too early, put it that way, and then I make a decision whether to get out of the trade, take break even, get out, keep the trade. Structural change is not there. Most time I keep my trade. If I if I see structural change, I close the trades. Right? So that is what you do. You still have to have the setups to trade, which you know. You're not just jumping into thing because you decide it's going to do that. It has to prove to you it's going to do that. Okay, good question. Can you share a stop loss placement? That will have to be specific to specific trades there. If you're putting a stop loss, you have to put, if you're trading flags, you have to put where you think you'll be wrong, that this is no longer a flag, right? That's where you would have to put your stop loss. Sunday, you made the assumption that you were able to establish how many people are in a certain assets. How can you do that? I made an assumption that I can tell you how many people are in a certain assets. I don't know where you get that weird idea from. I never even thought about it, much less to say it. First, I'll have to have a thought process in my head telling me I'm looking at how many people are doing what in which assets. I have no idea. I never even, the first time I'm hearing that, so I think you misunderstood what I said. We don't look at people in any, I've never even mentioned that. People in the assets, no, we don't do that. I think you misunderstood what I said. Please send me that part if you think I said so. Send me that part in the video. I'll be it's interested to me. How do you apply this to the stock market? It's the same thing. They make the same structures and the same charts. So let's pull any chart. Let me pull one up. I'll pull those that we did because you will want to see how I did it on the chart. So this is one of the chart that I did it on. And let's pull this up on daily. You should see this. I think you should daily and the weekly. I don't know where I made this one. This, remember when this started to fall here and everybody was panicking? I think it's in the weekly. I can't see the ones the charts that I post. It's weird that I can't see them. It should be in the daily or the 4-hour. The daily, I think. I don't know why it's not there. I actually forecast that this is going to be a correction and we're going to go up. So it's there, but it's the same thing, same structures. They make, like right now, everybody's panicking and freaking out. I think we're just making a correction to go back up again, right? It's not going to go anywhere. Now there are 34 messages that I haven't even seen. So I'm going to try to go very fast, take one or two. Where's the good based on psychological aspects of big boys trying to hunt? No, that's not true. That's pure nonsense. Wave has nothing to do with anything like big boys and anybody hunting anybody's thing. The volume of the market is so much that there is nobody hunting your stops. Just anybody who told you that is selling you a load of crap. I've heard that in a number of webinars where they, well, we do what the big boys do. What crap are you talking about? Which big boys are you talking about? How do you know what they're doing to do what the big boys are doing? Please give me a break. Those people are selling you a load of crap. They're doing what the big boys are doing. Once they say that, leave the webinar. It's pure nonsense. It has nothing to do with anything. Like they know what the big boys are. Who are the big boys? First, you tell me who are the big boys. Which bank? Citi? Bundes? Which bank you're talking about? Name me the banks that you think are the big boys and what they're doing. Since when they told you what they're doing, right? It's pure nonsense. Don't listen to those things. Listen to things that make sense, that are out of knowledge, not just anything. Someone say Ichimoku has L2. No, that's not true. Ichimoku is just a series of moving averages. Ezra, please describe pattern in Bitcoin. We're not doing any specific chart. Let me see. Are waves going based on psychology? Again, that's a no, that's not true. I answered that one already. Sir, can you do webinar on monthly charts for all currencies? We can try that if I find the time to do that. Where do you put the same question? Next one, are waves with the same thing? I answered those. Okay. If you stop typing, I'll probably go through all of them. I'm seeing the questions repeating themselves. Which indicator are you using and how you use them? I don't use them. You look at my charts, you don't see very much indicators there on them, right? Are you, as you were explaining that a correction can take 2 or 3 months, so is the market movement seasonal? Not necessarily, unless you're buying products that are seasonal. The market might be seasonal in that case. But in terms of currency, no, I don't think so. It's not really seasonal. Do you consider collaboration when deciding which pairs to trade? Correlation, sorry. Do you consider correlation? No, there is no correlation in the market. I did a webinar on that. Go check it out. You can argue with me from now to tomorrow. There is no correlation in the market. If you believe there is, good luck to you. And when you're saying that, I mean correlation in this market, in specific Forex market, there is no correlation. I don't think there is either in commodities. But, you know, some people would like to see things, people imagine things in charts. Like one I said, well, they're correlated 20% of the time or 40% of the time. I think they're just moving in the same direction, but they're not exactly correlated. Railways are correlated. They will never meet. Right? That's correlation. They will just never meet together. It's correlation is not, you're saying, if you're saying that 2 economies are correlated, then the currencies would probably be, right? That's the whole thing about Forex. If you're saying that the pairs are correlated, even if they're inverse correlated, it doesn't matter. When they say like Swiss and Euro is inverse correlated, what they're saying is that the other side, they're the opposite side of the US dollar pair, right? That's all they're saying of the US dollar. That doesn't mean anything much. Stops runs happens generally before orders get passed, and it's not necessarily stop runs, guys. Let me give you 2 minutes. I see a lot of people going because it's a long time. Let me explain this to you for 2 minutes. Those who watch this webinar to the end would learn something. This is something we teach in my class, so I'm giving away you this. I shouldn't have done, but I'll do it. Nobody's hunting your stops. Stop thinking that nonsense. Start with that. Nobody's hunting your stops. They don't know where your stop is. Nobody cares about your 1, 2, 3, 10 standard loss. The market does not move because of that. Market moves towards orders. And your orders is not being seen in the market because they're too small. Right? So here is the deal. Remember when the Swiss National Bank pulled that thing out of the promise they made that they were going to keep it, when they pulled that level they're keeping, when they're hedged, that they're pegging the currency to the euro, what happened? The market fell. Anybody know why the market fell there? So they pull it out. So what? Why did the market fall? There's only one reason why the market fell. Because nobody was participating in the market. And everyone thought that the currency should be stronger. So downwards movement is a strength in the Swiss. At some point, it stopped. You know why it stopped? Because somebody decided to participate in the market. Somebody decided at this price, you know what? I will start buying here. I'm going to start buying here, right here. At this price, I'll buy it back. Right? So market moved towards where the orders are, and there are always orders in the market, non-stop orders. That is why the market moves. Market will swallow every little order. So somebody will put an order to buy and somebody will put an order to sell. And the market are going to oscillate between those orders. Once one of them is full, the market will move away from there. Right? Orders. Now, who are putting those orders? We don't know. Sometimes it's the bank itself. So let's say one big bank wants to buy euro for their client. Some client called the bank and said, we need 500 million euros. That bank is going to start buying euro. The bank is not going to chase the euro all over the place. The bank will buy the euro at a specific area, right? At a specific price, the bank will buy euro at a specific range. If it goes out of that range, the bank is not interested in it. They want it at the specific range. So if euro comes to that range, they buy. It goes up, they leave it. Come back to that range, they buy. It goes up, they leave it. Come back to the range, they buy. It goes up, they leave it. Come back here, they buy. You noticing something? And when they're finished, they're out of the market. So if the market was going like this, the market will continue to go that. If the market was going like this, the market will continue to go that. So those ups and down movement you're seeing is not because they're hunting your stops. It's because that is where the orders are placed. They're moving towards the orders. You not knowing that there is an order there doesn't mean you're hunting your stop. Your little stop happens to be where the bigger orders are. And when there is no order, market will be in a free, it will not move, or it will be in a free fall or a free upside. Right? Most transactions happen when the market is not moving. When the market is in a sideways move, that is where the transactions are happening. If you have equal amount of buyers and equal amount of sell orders, not buyers and sellers, but buy orders and sell orders, the market will go nowhere. When there's a disbalance in these orders, the market will move. It will move to the next big order in the direction that it's already going, where the dominant order will lead it to go. So if everybody is selling and nobody is buying, guess what? It will drop until it finds buyers. If everybody wants to buy and nobody is selling, it's going to spike up until somebody decides to sell. And you get caught in those because you are not able to read that structure properly. That's why you get caught in that and you lose your little stop loss, and you think, oh, they were hunting for my 2 pip stop loss, my 2 micro stop loss, or my 2 standard stop loss. Market does not care about your 2 stop loss. Don't listen to people who sell you those stuff. Don't do that, guys. You know, you listen to all this crazy stuff are out there. I know that. I've heard them too. I've heard people say that, you know, like stop hunting. And I remember one time I commented somewhere, there's nothing like stop hunting. Stop saying those crazy stuff. And they took off on me. I was like, okay, I don't have time to argue with you. You either believe it or don't believe it. But there is nothing like that. Nobody's hunting your stop there. If there is a manipulation in the market specifically to move the market away from you, it's because they know there's an order coming. I think you guys may have seen that case, right? Where one of the bank, I don't know, one of my guys posted it, where one of the banks were charged for specifically manipulating the market so that they can sell the pong higher to somebody. They had a client who was going to buy $1 billion worth of pong from them, or 1 billion pong, something like that. They were going to convert from them. And they knew it in advance. And what they did was that they moved the market, the bank itself manipulated to move the market up so they can sell him at a higher rate. And it wasn't a big movement, but they, with $1 billion, it's worth it. You can make a lot of money. It's a huge difference. Now that manipulation sometimes happens, but all of that is part of the structure. That's a good thing about understanding the structure. Everything that happens will be part of the structure. Support and resistance diagonally, you can find it there. If you have good imagination, you will find anything anywhere in charts. But like I said, worry with what actually is happening in the chart. Forget about using these stuff. Think about what is actually doing. What is the chart? There's a reason I showed you this chart from the start. What is it actually doing? Forget about all this support and resistance and all the crazy indicators they're giving you that some people are sitting down creating and selling for $30, $40 because they think they're going to get 1,000 people to buy it. What is the market actually doing? What do you see the market doing? What are you seeing in the market? Forget about what, this is what the market does every time. You can see that, right? Well, learn to figure out that and learn to figure out this, and you will get this and you will get this. It's that simple. I can't put it simpler than that to you guys. Learn to read inside of those structures. That's what we teach you to do. So you want to learn to do that? Well, you can consider taking my course. You have my Skype me. That's what the market does. Forget about everything else. Because this you can see, right? I can tell you any fancy thing about stop hunting and about this and about blah, blah, blah. It doesn't exist. It's not there. Show me where the stop hunting was in there or in here. Where was the stop hunting? Or in this line going down very strong, where they were hunting your stops. When this market was dropping, where they were hunting your stops. There was no stop hunting in this. That means it doesn't exist. It's not there. You're just putting your stops the wrong place. Congratulations. You learned something today. Right? There is nothing like that in the market. Think of if you didn't put your stop. Would that spike happen? Let's look at it this way. Here's how you're going to understand that. Don't put the stop and see if the spike is going to happen or not. Take the trade and don't put a stop. Do you think the market will no longer spike up there because you don't have a stop there? Good luck to thinking the market wouldn't do that. You see what I'm saying, right? That's not why it moves. So learn to do this. It's simple. It's not difficult, but it's complex. You can do it. If I can do it, you can do it. And if all my traders can do it, you can do it. Well, most of them are making 60%, 65%. They're making money doing it. So you can do it. Right? How you look at it if there are two impulses, one after another? You're looking for reversals. I think I know what you're saying. You're looking for reversals. You know what traders like to call head and shoulder patterns? Let me show you. You get an impulse, you get a correction, you get another impulse, and that's followed immediately by another impulse and a correction. I think all of you know where that should go. They like to call this head and shoulders because they have good imagination. Well, that's an impulse, a correction, you're going to get another impulse. You want to call it head and shoulders? I'm okay with that. Call it whatever you want. We look at it as a reversal pattern where this structure is over and this structure is starting. How important is the stop loss if one is in the right direction of the trend? The stop loss is important only for one reason, regardless of which direction you're on the trend or whatever you're trading or whatever strategy. Stop loss is for one single reason, to limit how much you're going to lose if you're wrong about the trade. You can be selling against the trend. You can be selling with the trend. It has nothing to do with that. It has to do with how much you're willing to lose on this specific trade if you're wrong. That's all the stop loss is for. Saying, if I'm wrong, I will get out here and I'm willing to lose this amount. That's it. A stop loss is just another order to exit your trade. It's not, it has nothing to do with, with direction or you're going. People trade in those consolidations and make a lot of money. Up and down. So they could use a stop loss for up and down, and the direction of the trade is nowhere, it's just going sideways. In wave analysis, breaking the top or bottom is usually completing structure. Others call it Yeah, I know that part, right? They like to say, oh, that's a fake breakout. No, that's not a fake breakout. That's actually what the chart does most of the time, right? Could you please illustrate why market behaves that way? I mean, psychology of trading. Why the market behaves the way it behaves with those corrections? Well, at some point, people will want to take profit. Let me give you Bitcoin, for example. All of you know this because all of you lived through it, and you would remember, right? I still have it. You could still get a $10,000 if you find me those two trolls, right? So let's look at Bitcoin, for example. Why market behaves this way? If you're buying Bitcoin, let's say you are one of the people who are manipulating the market. You're big, you're huge, you have a vested interest in this thing. So you were buying it here. See that long, drawn out, going nowhere thing? You were accumulating Bitcoin there. And you accumulated a lot of it. And you want it to go up so you can make a lot of money because you're going to be selling it somewhere at the top here. You might not get to sell all of it immediately because you bought it here. So you sold some here and it started to go down. You get right back into the buy and push it up again, right? You sold some here, it go down, you get right back into the buy and push it up again. And you're selling slowly. At this point, you've created in the market, you've created an emotional feeling and all the dumb money, like they like to call it, I would say dumb traders. Traders who have no idea what they're doing, but they believe you can become rich if you buy Bitcoin. So they start buying. You see that buying spree there? That was a buying spree. Everybody was buying crazily. So if you're the guy who was accumulating here, who is selling to these people buying here? They're not creating that much Bitcoin so fast to sell to them, right? So who is selling? The guy who bought it here. He's selling to all of them here. And he's very happy about it. You want to buy? Buy. Keep buying, man. Buying, you're going to become a... He's probably even leading those internet saying that if you don't buy Bitcoin, you're stupid and you should buy Bitcoin if you want to be a millionaire. And you've seen that program. One guy even came to Dubai. I've heard of this guy way back, and then he came to Dubai to say how many millionaires Bitcoin made. You know, when he was doing that with that presentation in Dubai, somewhere at the top here, how many millionaires Bitcoin made? Well, if you want to be a millionaire in Bitcoin and you own Bitcoin at the top there, you have to sell it very fast. And none of them managed to sell it very fast because the reversal was too fast. So some of them might have sold in here. And if you didn't sell here, you sold here. And if you didn't sell here, you'll probably sell here. The market will teach you something. Right? So is it manipulation? I think no, that's normal common sense. If I buy here, I want to sell at the top there. And I want to buy it back at the bottom here so I can sell back at the top there. There will be enough fools buying at the top there. Most of those millionaires are broke. Here's one thing you guys should learn. Always count the money. Follow the money. Remember one of the questions I was asking when Bitcoin was going up? Where is the money? Nobody answered me until today. Where is the money, the real money that they're using to buy Bitcoin? Where is that money? Show me the money. If you follow the money, you will know what's happening in Bitcoin. So the people who bought Bitcoin here were accumulating the money at the top here. They gave you back that Bitcoin and they took your money. You bought it somewhere here or somewhere here or somewhere here and you thought you were becoming a millionaire. So you add more money and you add more money and you add more money. And they keep taking it from you. The more you add, the people who bought it 19,000, oh my God, I'm so sorry for them. Because now they have no choice but to exit, to throw it away, or they will have to exit it at some point. They're going to force you to exit that thing. They're going to keep you to exit it. When you do exit, guess what they're going to do at the bottom here when you're selling? Or when more Bitcoins are being made, right? They're going to be the buyers at the bottom here. And that up move, you will start buy back at the top here. Your thoughts that the people who wants to get rich in Bitcoin again will start buying back when Bitcoin get back to 18,000, because now it's going to go to where? 100,000. That would be the news. Remember the news? Bitcoin could go, one guy even put that Bitcoin could go up to 50,000. Good luck. He got a lot of fools to buy it at 18,000. Poor fellows. Right? They bought at 18,000 and now they don't know what to do with it. They're praying, God, please, can you send it back to 18,000? This would be my last buy of Bitcoin. I'll just get rid of it and don't buy it back again. I'll never buy Bitcoin again. Please, God, this one time, can you put it back to 18,000? Well, they might get lucky. If they understand structure, they might get lucky, because at some point in this consolidation, it might go back to 18,000. If they know that, they can wait it out and get rid of it for break even. When it comes back here, they can buy again, because this one will go. Now, will that make a common three-wave structure? I think not. I think this structure is going to be more complex than that and long drawn out, right? So you see, if you know, right? If you know structure, you're one of the lucky people. If you don't, you're hoping, you're praying. Okay, nice question. Let me answer this question, and this will be the last one, and we go. It doesn't make sense to me the way you are saying that if they don't find buyers or sellers for orders, they drop or they move, right? But later you say, because we do not understand structure, how come they find buyers or sellers with structures? So two things you're confusing yourself with. One is this. The first one was market is going up, right? Very fast. This is Bitcoin. The only way this thing can go up is if there are more buy orders coming in, which means willing people to buy it, right? They're willing people to buy. So the market is moving up fast, which means there isn't enough Bitcoin to sell, and there are more people willing to buy it. You see this bottom end market was going nowhere. People were still mining Bitcoin, and somebody was buying it. Somebody was buying all the Bitcoin that was mined, right? Somebody was accumulating a lot of Bitcoin. When market gets to this level, why would the market drop? You remember what I was warning you that it will drop? Why would the market drop? Because at this point, when they got enough willing buyers, enough willing people to say, I'll buy at 18,000, come on, let it go. It's going to go to 50,000. They will sell to them. You notice where the market stopped? That's where the sell actually is greater than the buys, which means everybody who had Bitcoin at that point decide they're going to sell. Who were the people that had most Bitcoin? Not you, not the people who start buying it here, who are buying their couple Bitcoins on that line. The people who are buying Bitcoins here, those were the people who could move this downwards. Now, I hope that makes sense to you, because the market would have continued to go if they weren't dumping their Bitcoins. If they weren't selling it to you and throwing all back into the market, it would still continue to go up. Why did they dump it in the market? Why are they getting rid of it? Well, because they see the stats and they see that the willing buyers are dying out. Not a lot of people are going to buy Bitcoin at 21 anymore, because the chance of making profit is less. So once they've got enough people that are willing to buy, they can sell it to them. And when the willing buyers are dying out, which means there are more Bitcoin than willing buyers, the market starts to go back down. And then what happens to the people who bought at 17 and 18 and 16 and 15? They start dumping their Bitcoin, because now they're not making profit, they're losing. So what they do, they join in dumping. They join in dumping. All my traders start selling out like crazy at 18, 18.5, 18.6. They had it at 21. They didn't sell there. They realized that it's turning. The market is turning now at 8. They managed to get it at 18.5, 18. Now some of them 19.5, right? Not 21, but 19.5. And that's where everybody realized, those who are smart, you got to dump. And that dump creates a rolling snowball. Everybody's dumping. The only people who cannot dump are the people who are stuck with it at 18 and at 19. And if they dump now, they will lose everything. If you bought Bitcoin at 700, let's say at 1,000, and you see it's dropping, you're going to clear. If you bought it at 800 and it's dropping, you're going to clear, because you could see that drop. And that is what is creating this. More willing sellers than buyers. Will there be willing buyers again to come back in here? Probably. Let's see. When the accumulation period is over, nobody wants to buy it that much now. Everybody's afraid of it, right? It's like, man, look how that thing falls. Well, it's probably going to go some more. They can still sell some more. They can still, this buy and sell will still happen. But the people who have accumulated, remember the Bitcoin did not disappear because the market is falling, right? It's not like Bitcoin just disappeared out of the 10-year. It's still there. The volume of Bitcoin is still there. You know what is not there? Or the people, even the people who made a little money, you know who made most of the money? All that Bitcoin at one time had a huge capital value. Where is that money? Those who lost money paid those who made money, including some that the brokers took, of course. I hope that concept is sinking into you properly, right? Hope you're getting it, because that is how the market moves most of the time. Once you understand that concept, you will figure out that you need to know structure. So you are not one of the people who are buying Bitcoin at 80. You rather buy it at the low, or you'll wait for it to come back and buy it much lower. And actually now, if you remember my last webinar was a call, you can buy Bitcoin. You can buy Bitcoin here now. You probably want to sell it. If you bought it here, you sold it here. You see? Because we understand what it's doing. We understand what this structure is doing. So we can still buy and sell. If you understand it, you can still buy and sell. Remember how I showed you the yearly chart on the Aussie? You get a move, you get a 1, 2, 3, you get a move. I'm going to ignore those small ones. You get them, you get a move up. You probably might get a 1, 2, 3 here, and you might get a move down. As they go like this is going to be more of a complex B wave in the making. This might be your first impulse down. You're going to get a correction here, and then you'll get another impulse down, and then you're going to go up. So how long would Bitcoin be in this sideways? Probably a while. It's not going to go up immediately. Why would it be a while there? They need to accumulate it at a cheaper price. Those who have the buying power for the volume need to get it at a cheaper price, and then they will start buying. When it goes up, they will stop buying. It will come down back, they'll buy again. Let me show you that, how it will happen here. They will buy. When it go up, they will stop buy. Come back, they buy. Go up, they stop buy. Come back, they buy, and then they'll let it go. They will keep buying every time it comes back, and then they will let it go. See? With that question, that sums up what we were doing, what I was explaining to you guys, and I hope you got it. With that, we'll end. I'm sorry for all the questions I couldn't answer. There's so many of them, and I know you're probably freaking out if I didn't answer your question. I'll try my best next time. We'll probably even an extra hour. We actually here for an hour and a half, right? Not necessarily. Last question, we don't not necessarily measure the waves, but we watch the structure within the wave to tell when it's ending. So I would see all of you on Sunday, right? And remember, if you like what I do, share it. If you think that this thing has information that is valuable to traders, please get it to all the traders out there, right? Let them, you're not, they just let them know it exists and let them decide for themselves. Not everybody would be wave traders, but if most of you are, it will give you an edge in the market. So I would see all of you on Sunday. Take care. I hope this video could go viral. I'll post it out. It's on YouTube, so you can make it viral. All the traders in the world should see. There are going to be a lot of trolls in it. We are okay with that. Right? Let's go. Take care, everybody. Thank you for coming. Have a nice day. See you on Sunday. Bye-bye.